on Bitcoin. And sure enough, it started rallying. Stocks did well as well over the last couple of days, and now we're at $41,000. So what's next is basically my question. Are we at a ceiling now, or is this rally into risk assets going to continue? And I have another question with stocks later, but I'll just let you answer that first.
I love it. I love it. So let's talk a little bit about, I'm going to critique your trade a little bit.
Please.
You did the precisely correct thing. So, and just to let people know, and here you can see my chart of Bitcoin in front of you, but here was your dip when the invasion started, right? And what I had done that night is I put out limit orders because it occurred. I figured it could occur while I was sleeping. I wouldn't be able to react. So I put out a limit order to buy Bitcoin, Polkadot, Solana, even some more Cardano. And sure enough, they got hit, which was beautiful. And I was anticipating the same thing. You anticipate an overreaction, the panic. We've seen panic before, how it crushes assets, risk assets initially. And then what you see is them bouncing back. So that's exactly what I did. You did the right thing. In fact, the next morning, I had GLD, which is gold, the gold ETF, and I actually unloaded it on the gap up at the highs because I also expected it to come back down. And again, these are extremes. So you always want to go counter kind of trend or counter thought process. And that's exactly what you did there. And that was 100% correct. So go counter trend and you'll usually be right. And in terms of Bitcoin, what we're seeing here is a beautiful pop today. My feeling on it is that you've now got more sanctions with SWIFT being introduced or taken away from some of the Russian banks. This is becoming a longer drawn out conflict, more sanctions on Russian oligarchs. And that's going to make people more intrigued about, okay, well, does Russian oligarchs, do they start buying Bitcoin? Do they diversify out of rubles and out of currencies where they can actually move those Bitcoin assets to different locations and access them still? And then you also have the plight of the Ukrainians, where it's hard to get out of the country with suitcases full of money, but it's a lot easier to go somewhere else, access your Bitcoin as well. So I think you're seeing a little bit of that vibe of, okay, Bitcoin makes a lot of sense when there's geopolitical risk out there.
One of these days, Gareth, I'm going to make the wrong trade and I'll bring it up and I'd like you to critique what I did wrong there as well. But hasn't happened yet, but maybe in the future we'll get there. I'm pretty sure it'll happen at some point. Listen, Bitcoin has done very well. You know what's interesting is that today, as we're speaking on Monday, stocks are down a lot. The S&P 500, for example, it's down 1% on the trading session. Bitcoin's up like 4 or 5%. So a bit of a divergence there. It's not trading exactly like tech stocks would. Just today, overall, I think there's still a correlation. I'm just wondering if, let's say, the news in Ukraine has actually been positive for cryptocurrencies, because we've heard of a lot of cases where people are donating money to the military or to civilians via cryptocurrencies, Bitcoin. We're hearing about fundraising from the Ukrainian government through Bitcoin. We're hearing about Russia's, just a couple of days ago, Russia's banks, a few of them were taken off the SWIFT system. So now people are speculating, like you said, are Russian billionaires or even just regular people, are they going to go into Bitcoin now or other cryptos just because the SWIFT has been cut off for some people, and so now they have another avenue to go into to transfer funds through cryptos? So maybe all of this is playing into Bitcoin's favor. I don't know. What do you think?
I think it is. I mean, again, my long-term thesis for Bitcoin is bullish. Yes, I do believe eventually we will see another leg down to 20,000. My very short term, as I mentioned, I bought some Bitcoin on that dip. So very short term, I think there could be a little bit more upside. But per the chart, I'm looking at an upside that could be capped around 42,000. That's my first kind of resistance. We're getting very, very close. And then if we get through 42,000, you have this upsloping trend line. You can see how it hit it right here. If we come back to it, it's around 47,000. That would be your next resistance. If it somehow can push through 47, then you're talking about 52,000 as being your next likely target. Now, again, this is all short-term movement. We're inside of a bigger bear cycle, in my opinion. So eventually we will see the Fed tightening more. And I think, by the way, that's part of it, right? So, as horrendous as the invasion is and people getting hurt, there's a chance for the equity markets to say, okay, the Federal Reserve may not raise 50 basis points in March because of the geopolitical turmoil. Maybe they're only going to raise 4 or 5 times in 2022 versus, I think, what JP Morgan said a couple of weeks ago, which was 8 or 9 times in 2022. So you've seen this little bit of a situation where tech stocks have actually been doing a little bit better since the invasion. And I think it has a lot to do with the chance that the Fed is not as aggressive on tightening.
Okay, so I know in the medium term you're still bearish, but let's talk about short-term price movements. So and price targets. $47,000, you're calling for the resistance level. Beyond that, we're looking at 52. You said. So we're at 41,000 today. You're saying that this short-term momentum is still likely to continue until at least 47,000.
Yeah, so I mean, 42 is going to be your first, small test. It's only a minor level of resistance here on the chart. So again, small test coming up at 42,000 may take a couple of days to try to push through it, but I do think that there is a decent chance that it's able to, and then may trade back up to that 47, this upsloping orange trend line here. I think what investors will have to understand is that everything we do here in technical analysis land is based on probabilities, right? So when you see a sharp move down like this, there's inevitably a period where you go sideways and chop for long periods of time. So you can see how you're starting to kind of do this pattern. And ultimately, what you're forming is a bigger bearish pattern on the daily chart. It's called a bear flag, or an in spirit of bear flag. And so the odds favor that at some point it breaks down. Now, it gives you a lot of opportunity to trade the range, which is what I've been doing. But inevitably, the midterm, I still think sub 20 or 20,000 is likely. And then once we get down there, once you see this kind of final flush out .com-ish type reckoning period, then I'll be starting to hodl myself and starting to accumulate more Bitcoin for the longer term.
Okay. And if it breaks down to the downside, we're at $41,000 today, at what point on the downside would it start to worry you and you would start to say to yourself, okay, now is time to actually start shorting a bit more?
Yeah, and that's a great question, right? So this can be used for people that have longs like me. If it breaks this next level, I'll show you guys, then I would exit the longs that I have right now and say, okay, game up, game over. And basically it's this trend line, right? So you have a very defined line that you can watch. And the beauty of it is it's actually rising. So your stop is getting tighter and tighter as Bitcoin goes up, almost like a trailing stop in this situation. So if you were to get below this line on a daily closing basis, I would be very concerned that this range is now broken and price will then start trading down pretty aggressively.
Okay. All right, let's move on to stocks. So just to recap, actually, before we move on. So $47,000 is your first upside target, then 52. Got to break about 42,000 first, though, is what you're saying for Bitcoin. Okay. Now let's take a look at
resistance. Yeah, small resistance at 42, then big resistance at 47, then big resistance at 52. I don't expect it to get through 52. I think there's a decent, maybe 50% chance we get up to 52, but I don't think we get through 52.
You don't think we'll get through 52? All right. Well, that tells me when I need to sell that. I guess for anybody else watching, people were asking me actually offline, is Gareth still holding on to his $20,000 Bitcoin outlook? I know we touch on this every time we interview, but so much happens in the world, so much develops very quickly. I have to ask you to recap and actually to provide an update if you do have an update on your views. So what's your downside target?
Yeah, downside is still 20 or sub 20,000. Nothing's changed in terms of that midterm price outlook. You still have a Federal Reserve that maybe is getting a little less hawkish in terms of how fast they're going to tighten, but I think that's going to keep inflation higher for longer, which means if we do get a settling down of the Russia-Ukraine situation, then the Fed is going to go back right towards tightening. That's going to be a risk-off situation, and Bitcoin and cryptos need to see that full flush out. So again, still ultimately looking for sub 20,000 for me to start to really accumulate for that longer term.